A myriad of economic data. What seems really intriguing to me is that maybe Powell's speech on Friday has now reversed the way the street reacts to news and events. Maybe now bad news will be bad news and good news will be good news. Case in point, stocks edged lower on that disappointing manufacturing report out this morning. Also, consumer confidence, which came in at a huge miss. But there's no sense of panic, obviously, in the air, just anxiety that to a large degree also comes with booming markets and the guessing game on when the music stops and just how to ride it out until that fateful moment. Now, if you're going to ride it out, then you want to find the winners and the opportunities because this has been one of the most uneven rallies that I've ever seen. Joining me now, market watcher Sam Stovall, David Nelson, and Aaron Gibbs. I want to start with this consumer confidence report because it was another big miss. We saw even with higher incomes last month, consumers spent less money. They saved more money. Sam, what's going on with the consumer? They're not using credit cards. They're stacking up their savings. They're expressing a whole lot of insecurities. What's going on?
Hey, Charles, good to talk to you again. Well, I think that they're just being overwhelmed by all of this negative news that's out there. We've been seeing, obviously, the Taliban takeover of Afghanistan, worrying about other factors like the surge in the Delta virus, worries about inflation, et cetera. So I think investors or retail people are basically saying, let's get our financial house in order if possible, so that if we do have to go into a limited lockdown or just make sure that we're not going to get caught with all of this negative news.
Right. You know, Aaron, and it was a little bit of a slip with Sam on investors, but even there, the American Association of Individual Investors, bullishness collapsed about 2 or 3 weeks ago, and it hasn't rebounded. So just across the board, something on Main Street that does not reflect what's happening on the stock market right now.
Yeah, I think the bullishness we've seen certainly as the markets have recovered more in the past 2 weeks is perhaps investors are looking a little farther forward versus that survey that came out on consumers where we see that disconnect. I think that's that Main Street feeling of, wow, we need to be prepared because there's so many unknowns that can just pop up. And with this Delta variant, are my kids not going to be able to go to school? Those sort of day-to-day issues versus Wall Street is like, we'll get through it in 3 months. And I think that might be
all right.
That's all.
I'm sorry, I didn't mean to jump on you there, Aaron. I thought you were done. But even with the consumer, whether it was a sentiment number a couple of weeks ago that absolutely crashed to this confidence number today, there's current conditions and there's expectations. And the expectations 6 months out, they even look shaky. So, David, you think about that, and then you take, for instance, the Chicago PMI number. It was another miss. It follows a huge string of misses. 4 of the 5 Fed regional manufacturing reports have been unmitigated disasters. Now, we know there's supply chain issues. We know there's inflationary issues. The manufacturing renaissance that I thought was a reason to own this market, is that over with?
I hope not. Look, I have to agree with you. I think the supply chain issue is a big part of this. You know, there's huge pent-up demand, but unfortunately, inventory in some mission critical components like chips just isn't there. And we see that play out in things like the auto sector. In terms of inflation for a supply chain manager, at the start of the year, it was $5,500 to ship a container. Today, it could be as much as $22,000. And as far as the renaissance goes, what we have to become, America has to start making things again. We can't be completely reliant on some of our adversaries like China. It's not just an economic concern, Charles. It's a national security threat.
Amen, brother. Hey, now one area that is sizzling in the economy is housing. This Case-Shiller report is blowing away consensus. Some are saying if you look at the data, this is the hottest housing market ever in history. So I've got a two-parter. A, can it continue, and how do we make money from it? And Sam, B, the implications with respect to this inflation concern.
Sure, Charles. Well, actually, if you look over time, housing prices pretty much kept pace with inflation. But then when we had the housing boom in 2005, we were 35% above inflation in terms of housing price or median home price in America. We came back down to the CPI level in around 2011 and are now at more than 40% above. So we are looking at a level that has really not been seen in history. I guess the question is, does it end up deflating like we did back in the mid 2000s, and how long will it take for that deflation to occur? I mean, you're absolutely right. We saw a 19% annual increase in terms of the Case-Shiller report today, and we basically saw that for all of the 20 cities that are examined, that they are all looking at double-digit growth.
Yeah, yeah. And 19 of those 20 at all-time highs. I think Chicago, the only one that's not. But Aaron, it's I'm looking at these home builders. They're a bigger share of new home sales. Some of them look intriguing. Are you looking to invest still? Is there opportunity to make money still in this housing boom?
Well, I think to Sam's point, when you look at sort of the overvaluation of home prices, we know part of that is supply chain and some of these prices should come down, but that may not necessarily be more profitable for these builders. And another part is the low interest rates. And for the past month and a half, it looks like interest rates have bottomed, which also may not be so great for some of these home prices and home builders. So I'm going a little deeper. I like to look at construction. Because even whether these home builders can make as much or more money on these prices, we do know that its supply is down. We need more houses. And so I'm just going baseline and saying construction materials, and Vulcan Materials is one of my favorites.
And just to underscore, I'm glad you said that, underscore how important rates have been. If you just look at 2002 versus now on a house that costs 300 grand with 10% down, your monthly pay right now, your monthly rate would be $1,100. Back then, all the way back then, it would have been $1,700, all because of where interest rates are now. So maybe that alone could keep it going. I'm looking at construction too. Let me shift over real quick on inflation. And David, your thoughts on tapering. 2013, I went back, I keep looking at it. It wasn't a big decline. It was sharp. It came off of comments that was said by the Fed chair during testimony. Should we even be afraid of tapering anymore?
Investors are going to like tapering right up until the time rates start to climb, and that's when they're not going to like it. Asset classes compete for your dollars just like everything else. And once you start to see 10-year rates start to push meaningfully above 2, it's probably going to weigh on multiples. I think the last time bonds were a competitive asset class was 2018. And when rates started to push towards 3%, you couldn't get out of stocks fast enough. So we still have a fair amount of headroom. We're, 1.3, 1.4% right now. So I'm not concerned right now, but somewhere down the road, we're going to have to deal with this.
Sam, I guess that's what it's all about, the distinction between tapering, which is buying fewer assets but still buying, versus hiking rates, which may never come.
Oh, absolutely. Erin and I work together at S&P, and she knows I like to look back in history. And I looked at the taper tantrum last time, and yeah, the market fell a little less than 6%, but we got back to everything we lost in only 17 calendar days. And then the market was higher 15% in the subsequent 6-month period. So I would tend to say that investors might say, well, gee, if the Fed's going to take their foot off the gas, that might be good, implying that the economy is strong enough to withstand it.
Aaron, I want to ask you a question about 6 months ago, 7 months ago, we had a discussion about Zoom and Roku. You told our viewers to wait. Roku's been up and down, but mostly down. Zoom is getting hammered today. I think it's oversold, but should they now look at it? You said wait. They've waited. They were right. You were right. Now is the time to get in.
So actually, in this space, I actually like Microsoft as a competitor to these guys. Zoom has some, yeah, I know, and I'm so anti-mega caps, and this is the one mega cap I really like. I think they're doing really well in this space. I think they have a lot of competitive pressure against these newcomers. Zoom, even though it's doing much better, and the prices come way down, and it did hit some nice lows in the summer.
Yeah.
I think that they just have such a hard time type of growth. So I'm saying no, not sorry.
I'm a boxing fan, and usually when someone thinks they won and it's the last round and a minute to go and they don't want to get knocked out, they kind of dance around. That's what you just did. You won, but you didn't want to get knocked out. I got you. I know exactly where you're coming from. Sam, David, Aaron, thank you all very much. I appreciate it.